Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
After a week filled with inflation data, today's economic calendar is giving us a bit of a break going into the weekend with no Black Star events being released today.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the US dollar index held on to recent gains, bolstered by a stronger than expected producer prices and falling jobless claims, hinting that the Federal Reserve would have to maintain its inflation-fighting interest rate hikes for longer. The US producer price index bounced to 0.7% in January, after declining 0.2% in December. Meanwhile, jobless claims unexpectedly fell to 194,000, compared to the 200,000 claims expected. The strong PPI data and hawkish speech from Cleveland Fed President Loretta Mester has raised rate expectations further, and this is key for keeping the dollar in an upward move. Now let's have a look at what we can expect from Euro USD today. Should we stay below that support level at 1.066, we can expect further downside potential on this specific instrument, leading down to that next primary support around that 1.058 level. Now let's move over and see what's making headlines on Wall Street. The Dow Jones closed lower as data pointing to underlying inflation pressure and a tight labor market stoked further fears about the Federal Reserve's rate hike path, at a time when some Fed members say a move back to bigger rate hikes isn't off the table. The S&P 500 fell 1.4%, the Dow Jones Industrial Average fell 1.3%, and Nasdaq was down 1.8%. Additionally, Tesla dropped by more than 5% after announcing that they will recall more than 362,000 vehicles in the USA to update their full self-driving beta software after US regulators said that the driver-assisted system did not adequately adhere to traffic safety laws and could cause crashes. Now let's have a quick look at the US 30 chart. Here we can see that the US 30 is about to break that primary support level at 33,600. Should this happen and the further downside momentum continue, we could see a sell-off back down to that 33,000 flat level. Now let's head over to commodities. Oil prices are on track for weekly losses as it's heading for its fifth straight day of negative results. A strong US economic data heightened concerns that the Fed would further tighten monetary policies to tackle inflation, a move that could hit for oil demand even further as crude stockpiles grow. Looking at our crude oil chart, here we can see that we are currently just above that primary support at $77 a barrel. Should this support hold up, we can see additional buys back up to that next primary resistance at $82 a barrel. But based on the fundamental data being released during this week, there is a greater chance that this support level will be broken, and we should then see further sell-offs back down to our next primary support around $72 a barrel. Gold prices fell further this morning as stronger than expected US inflation data and hawkish comments from the Federal Reserve officials brewed concerns over more interest rate hikes. The yellow metal fell 0.5% and is set to lose between 1 and 1.7% this week, its third straight week in the red. Looking at the gold chart, we can also see here that gold is currently hovering just above that primary support level at 1,824. Should this support level be broken, we could see further sells down to our next primary support at 1,780. And finally, let's finish things off with cryptocurrencies. Major cryptocurrencies have witnessed a significant rally over the past week, despite concerning economic data released in the USA. Bitcoin surged over 12% in the last 5 days, while Ethereum rallied close to 9% during the same period. Despite the optimism, the $26,000 level is considered a stiff short-term resistance. This is because the maximum open interest buildup appears to be concentrated between $25,000 and $26,000 a coin, according to data from 2 different exchanges. Now having a look at our Bitcoin chart, here we can see that we are currently hovering just below that $24,000 resistance. Should this be broken, we could see a move back up to that $26,000 resistance, which if that holds up, we can see further sells back down. Should the $24,000 resistance hold up, we could potentially see sells back down to our primary support at 21,500.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the best be with you. Cheers.